If you own a home in the Inland Empire, Upland, Ontario, Rancho Cucamonga, Verne or Chino, you're likely stuck in what I call the 2026 trap. You have a ton of equity, but you also have a 3% mortgage rate. And you're asking the million-dollar question, should I sell in 2026 or should I just stay put and hope that rates come back down to 4%? Maybe you're in a condo that feels like a shoebox. Or maybe you're in a big house and that's become a maintenance nightmare. Or maybe the insurance and the taxes have crept up so high that you feel like you're house rich but cash poor. So in this video, I'm giving you the brutal numbers-driven truth about the 2026 Inland Empire housing market. We're going to break down what exactly happened in November, what it means heading into 2026, and whether selling, buying, or refinancing is even worth considering right now. Stay with me till the end because I'll give you a 10-question checklist that'll help you decide exactly what to do. I'm John Abril, a realtor and mortgage broker here in Rancho Cucamonga, and I help people make data-driven real estate decisions. No hype, just truth. Hit subscribe and let's dive in. So let's start with a hard reality. The national news won't tell you this, but the Inland Empire is its own market. And here's where it stands as of December 2025. Number one, the crash didn't happen. Prices didn't fall. In fact, they grew just a little. According to the latest data from the Inland Valley Association of Realtors, the median sales price in November 2025 was $627,000, only about 0.3% higher than a year ago. That's not a crash. That's flat. That tells us that people are still moving here because it's one of the most affordable parts of Southern California. Number two, inventory is rising. Now, even though new listings dropped over 12% last month, total inventory in many parts of Riverside and San Bernardino counties is still higher than it was last year, meaning buyers have more options and sellers have more competition going into 2026. Number three, mortgage rates. Rates are in the mid 6% range right now for a 30-year fixed rate. Experts project a slow drift down, maybe towards 6% or slightly lower by late 2026. But this is a forecast and it's not a guarantee. So here's the key takeaway so far. Prices are flat, inventory is rising, rates are easing, but not collapsing. That's not chaos, that's a balanced market where strategy matters more than urgency. Now let's talk about you. Most sellers fall into one of three categories. Bucket number one, the move-up buyer. You bought a starter home 5, maybe 7 years ago, maybe in Upland or Ontario, and now you need more space, but you don't want to double your mortgage payment. Bucket number two, the downsizer. You've been in Rancho Cucamonga or Verne for years. Your home has big equity, but the stairs and the maintenance are wearing on you. And bucket number three, the cash flow pressure cooker. You're not moving up or down, you just need breathing room because inflation and bills are stressing you out. If any of these hit home, keep watching because next we'll break down the math. So let's talk numbers. You need three figures. Number one, your walk-away check. Suppose you sell for $800,000. Subtract roughly 8% for selling costs, and that includes commissions, repairs, closing costs, and that's about $64,000. Then subtract your remaining loan balance. Let's say $400,000. That leaves you $336,000 in net proceeds, tax-free in most cases. That's real money. That's options, that's freedom. Number two, the true monthly cost of your next home. Don't just look at the mortgage payment, look at the total cost. New mortgage at the current rates, which is in the mid-6s, reset your property taxes. These usually increase because they reassess at the purchase price. Now you have insurance, which is higher now, HOA or maintenance, utilities, and upkeep. This gives you the true monthly nut, the real cost of living in your next home. Number three, your Life Fit score. This is my favorite part, and it comes straight from working with hundreds of Inland Empire homeowners. Ask yourself, how well is your current home fit your life today? Rate it on a scale from 1 to 10. 9 to 10, the house fits you like a glove. Definitely stay. 7 to 8, it's decent but not ideal. 5 to 6, you're feeling the cracks, it's time to think. Below 5, this home is a burden, it's time to act. When you evaluate practical needs, the layout, the commute, the repairs, the stress, space, your Life Fit score helps you make a real answer, not an emotional one. Now, Quick side note on mortgage rates and bigger economic signals. Rates today are in the low to mid sixes. The Fed's most recent guidance actually showed a slowdown in rate cuts, probably just one next year, not a rapid drop. Interestingly, mortgage rates and oil prices peaked together in early 2025, and then both fell together at the end of the year recently. Oil prices are around $57 to $58 a barrel, often signaling an easing in inflation, and that can help rates come down gradually. But rates aren't collapsing, they're just giving some relief. And the stable or easing rates in the balanced market are good news for planning your next move. So before we go any further, let's talk about something very important for a lot of homeowners in California. Prop 19B, property tax portability. And here's the short version. If you're 55 years or older, Prop 19 allows you to transfer your property tax base of your current home to the new home anywhere in California up to 3 times in your lifetime under certain conditions, so you don't get hit with a huge new property tax bill just because you moved. Under this law, you can sell your current home and buy or build your replacement home within 2 years, keep your lower tax base instead of getting reassessed at today's higher market value. That means that for many sellers over 55, selling your home won't automatically mean much higher property taxes on the next one, as long as that you qualify and file the correct paperwork, Form BOE-19-B. The benefit is huge for those who want to downsize or relocate without facing a massive property tax increase, and it's something many older homeowners don't know that they can use. Now let's zoom in locally. According to the Inland Valley Association of Realtors, Upland, the median price is $818,000, up 7%, 20 days are on the market. Good news for sellers with well-prepped homes. Ontario, $651,495, which is about down 3%, and there's 26 days on the market. Still active for value-oriented buyers. Verne, $750,000, down 24% with 22 days on the market. That reflects fewer high-end sales skewed by the data. So more homes sold last year that were much more expensive. Chino, $770,000, up 7%, 30 days on the market. Strong family demand, but longer decision cycles. Rancho Cucamonga, $780,000, up 1%, 31 days on the market. Stable, but presentation matters. Claremont, $1.05 million, up 15% with only 15 days on the market. Premium market with still fast movement. Now, here's what that means in plain English. Equity is still here, but the frenzy is definitely gone. Prices are flat overall, some pockets are up, some are down, but almost every city is seeing longer days on the market. This is a balanced market where buyers aren't rushed and sellers need to be precise. Now, here's the checklist that I promised, the 2026 Stay or Go checklist. Number 1, is your Life Fit score below 6? Number 2, do you have at least 20% equity? Number 3, can you afford the true monthly cost of your next home today? Number 4, are you moving for need, like health, space, schools, or a want? Number 5, if rates stay in the 6s for 3 years, are you financially stable? Number 6, does your current home require repairs you'd rather not handle? Number 7, do you plan to stay in your next home for 7 to 10 years? Number 8, are you competing with new construction offering incentives? Number 9, is your income secure for the foreseeable future? And number 10, when you imagine making the move, do you feel excited or just anxious? If you answered yes to most of these, well, it's time to act intentionally. Here is the bottom line. The Inland Empire market in 2026 is steady, not wild, and that's your signal. Steady markets reward planning clarity and execution, not panic. If you want precise numbers, what you'd walk away with, what you could buy next, and what the true costs look like, comment numbers below or send me a direct message and I'll run it with you. No hype, just reality. If this has helped, hit like and share it with someone that you care about, especially a neighbor thinking about their next move. And make sure that you subscribe so that you don't miss what happens next in the 2026 housing story. I'm Abril, and I'll see you in the next one. Thank you for watching.